For our next talk, we will learn about how to manage our volatile portfolios into a consistent one.
So our next speaker is the President and CEO of Citi Securities Inc., one of the largest global equities trading firms in the country. He graduated from Bentley University in Boston, Massachusetts in 2003 with a bachelor's degree in corporate finance and accounting, and is designated to train and oversee more than 40 proprietary traders for the company. He was exposed to stocks at an early age of 16 and has been trading global markets for more than 20 years now. A warm Trader Summit welcome to Mr. Lawrence Lee.
Good morning, guys. You guys still okay? All right. So today, my topic is risk management. And, okay, how many people here like to make money? I don't see everyone's hands here. Okay, how many people here like to make money? All right. How many people here have lost a lot of money? How many people here have lost a lot of money on this stock? Konti lang yan ah. All right. So the question that I have is, how come you guys who raised your hand, I gotta ask you guys again. How many people here have lost money on this stock? Why did you guys lose so much money on this stock? Okay. Whenever you're looking for a stock, like this guy was one of the stocks that everyone was talking about when it IPO'd at 1050 at that time. This was CHP. For those of you who don't know, this is CHP in 2016. And this guy IPO'd at 1050, 1075, and went all the way as high as 13 bucks. You guys can see it right here. Tama? Here's my... right here. So when this happened, there's a huge rush of individuals who want to come and participate in CHP. We have Duterte coming in, build. Diba? Infrastructure play, cement is one of the primary reasons, the primary inputs for build. Tama? Okay. So, when you guys are buying this, dapat may cut loss kayo. Tama? Tama? So kung may cut loss kayo, ba't laki ng tinalo ninyo? Right? So if we're going to put a cut loss on this stock at this time, where would it be? It'll probably be the IPO price, right? And it obviously price has shown that it's held several times on that 1075 level, correct? Tama? Okay, so what happens when it breaks past that level? What do you guys do? Buy more. I heard of buy more. What are you guys supposed to do? Average down. What are you guys supposed to do? You're supposed to cut your loss. Tama? But how come you guys are here, and I asked you guys earlier, you guys lost a lot of money on this guy? What happened? What really happened? And the question that I have for you guys is this. This happened. Bakit long-term na kayo? Right? Because at that point, if you're telling me you wanted to purchase that stock, you guys have a cut loss, when prices broke down, ang dami pa niyo sinabi. What did you say? Magandang kumpanya naman yan. Baka umakyat ulit bukas. Hintayin ko na lang mag-rally. You guys ever heard these excuses before? Right? What else? The most popular one. Para sa apo ko na yan. Right? Hey, guys, this happens. This is real. You guys firsthand experience, you put in a position where you're supposed to be cutting your losses, and when you're going to cut your loss, you have every single excuse in the world. Yes or no? Yes. What is the real reason why you don't cut your loss? Do you guys know? What is the real reason? The real reason is you get shocked at the size of your portfolio loss. This is the truth. There are two ways for you to get shocked. One, alam ninyo malaki yan, ayaw na ninyo tignan. Right? Nag-breakdown CHP, ayaw na tignan yan, malaki yan eh. So you're in denial. Right? You're in denial. What's the second one? Hindi mo alam gaano kalaki yan. You're oblivious to how much you're losing. You don't really know how much it is. So when you open your COL accounts, it looks like this. This picture is from Shortstops, the podcast we have on Kilom. Right? Pagtingin mo, 400,000 yung talo mo, ha? Eh, hindi ba 400,000 lang nilagay ko dyan? Guys, you have to make sure that you are mentally prepared and understand how much you are losing if you are wrong. So what happens if you knew how much you were losing if you were wrong? Would you cut your losses then? That's a pretty good question, right? That's a very powerful question that you guys have to ask yourselves. So I'm going to run through an exercise with you guys. If you allocated 10,000 pesos when you were going to cut the stock at 1075, when prices were breaking down at 1075, your portfolio loss is, pagtingin mo sa portfolio mo, log in, negative 10,000. Kakat loss ninyo? How many are going to cut that loss? Wala pa rin. Guys, you have to know that when you are wrong, that number on the portfolio, that number, it should be the same number as the one that's in your head. Make sense? So the question that you guys are asking in your heads right now is, so parang naghahanda akong matalo. Tama? Hindi. Mali. Narinig ko tama. Mali. You don't prepare to be wrong. You prepare in the event you are wrong. That's two different scenarios. Okay? What does this mean? It's like a seatbelt. Why do you wear a seatbelt? Nobody wears a seatbelt here? How many people wear a seatbelt here when they drive? Mandated by law, tama? Why do you wear a seatbelt? You wear a seatbelt in the event you get into an accident, tama? Not because you plan on getting into an accident. Those are two completely different scenarios. We are here at Trader Summit, hindi Investor Summit, Trader Summit. So this advice I'm giving primarily to those who are short-term trading, right? The investors, they have their own summit, bahala sila. The reason why we talk about this, and the reason why even Leonard and Charles were talking about it earlier, was that this is the specific game that we are playing. You guys are here today to learn about trading, not investing. Make sense? So if you guys are trading, it means that whenever you're going to push that submit button on your purchase, on your order ticket, you have to know how much it is that I expect to lose if I am wrong. Got it? Back to my seatbelt analogy. You have to remember, you wear that seatbelt in the event that you're wrong. But the other thing is, you can drive without a seatbelt, tama? Can you go out on the road without a seatbelt? Yeah. But it only takes one mistake to wipe everything out, tama? It only takes one accident to completely destroy everything. Yes or no? Yeah, that's why we wear the seatbelt in the first place. The same with the market. It only takes one time that you guys are not prepared in your portfolios when you enter that order and you don't know how much you're losing, and then the stock looks like CHP and you're dead. Tama? Guys, this is something that you guys have to understand. The game that you are playing. Got it? All right. Which brings us to this word. We talk about this all the time, and I think even April was talking to me earlier that she wanted to mention it. And it's what we call value at risk. Value at risk, or VAR, so moving forward I'll refer to this as VAR, is the amount you are willing to risk in the event you are wrong. So this number can be calculated, guys. This is not some magic number I get out of the air. Okay? This represents a percent of your portfolio that you risk in the event that you are wrong. What does that mean? How big should that number be? Nahilo na ako. Si ma'am dito, parang hindi ko na, dami ko pang bibilangin. No, it's not that difficult. Okay, and I'll make sure it's not that difficult for you. Okay. 1% VAR. What is 1% VAR? 1% VAR is you're risking 1% of your portfolio in this trade. Parang ang liit, no? Kausap ko nga si Boss Dino eh. 1%, di ba liit lang nun? What does 1% really represent? 1% represents 100 shots straight before you zero your portfolio. How many people here are so bad that you make 100 straight wrong trades? Diba? It's pretty difficult to be that bad. Now, why 1%? Because 1% on average, if your entry to stop is, the risk profile is 5%, 1% VAR is equal to 20% of your portfolio. That means at any given point in time, if you're 100% deployed, normally you're 5% VAR. What does that mean? Pagka-cut loss mo lahat ng hawak mo, talo mo, 5%. Makatulog ka pa ba? You can. Right? Hindi ka tulad ng 400%, 400,000 kanina. Okay. How do you calculate it? You take your portfolio, you take your VAR. For those of you who don't writing it down, you're writing it down. I'll give you a better way to do it later. Okay? Portfolio times your VAR equals the risk, and that number is the number. Pagka-cut loss mo, yan yung number na nakikita mo. Right? So pag 1 million yung portfolio mo, 1% VAR, pagka-cut loss ka na, 10,000 pesos yung nakikita mo sa portfolio. Make sense? All right. So let's look at it in the base case. This is CHP, the same chart that I showed on my very first slide. This is your buying point. This is your stop loss. Okay? This purple area represents your 10,000 pesos. Does this make sense? So if I'm going to cut it, by the time it gets to 1075, I've lost 10,000 pesos. So the question I have for you guys is, how many shares do you buy? Right? So I'll help you do it. Okay? I'll run it through you one step by step. This is how you calculate it. Risk over entry minus stop. Ano? Dami na naman ako kakalculate, no, ma'am? Huwag ka mag-alala. Promise. Ito yung giveaway ko for the day. I have a giveaway for you guys. You guys are going to love it. So it's 10,000 pesos divided by 1150 minus 1075. That's this number. Okay? So the total shares that I will be buying will be 13,300 shares, or give or take 15% of my portfolio. Okay. Dami kong kakalculate. Tama? Oo nga. Sabi ni ma'am, oo nga. What I want you guys to do is I want you guys to take out your phones. For iPhones, all you need to do is open your camera and point it at the QR code. For those of you who are on laptops, you can use the link at the very bottom. I want you guys to open it. You guys open it yet? For those who are Android, you can use any QR reader. QR reader can be found in Viber. I think almost everybody here has Viber. Tama? Ano lumabas? Right? This is our COL VAR calculator that we are giving away for this event. At any time, you have complete access to this VAR calculator. Okay? It's pretty cool. So it looks like this. It looks like this. All you got to do is you got to input. I want you guys to do this with me. Huh? I want you guys to input your portfolio size. So in our situation, it's 1 million. Tama? Piliin mo lang on the VAR, this portion. Just select your VAR. So we put 1%. Entry price, 1150. Stop price, 1075. You guys do it? How many guys did it yet? Wala. Nobody's done it yet? How many guys do it? You guys got it? Is this the number that came out? Guys, I want you guys to use this facility. We built this from scratch for you guys to understand. And I want you guys to be dependent on this guy the way that my traders, all 40 of them, all use this trading method. That means that when you go to sleep at night, you know how much risk. Pag tutulog ako, sige, tatlo hawak ko, tigwa 1% VAR. Ibig sabihin, pag namatay lahat bukas, 3% VAR ako. Talo ko lang 3%. Makatulog kayo? Yeah. Pero inisip niyo, parang ang liit naman ang hawak ko. How come? Guys, you have to remember that if you guys are making $3 every time you're right, if you're risking 3%, your upside should be 9%. That's a pretty big number at any given point in time. Make sense? Okay, so these are the things you have to keep in mind. All right? Good? Okay. Which brings me to risk management tips for you guys. Number 1, risk is the only thing you can control. You cannot control how much you will make, as much as we all think we can. How much you can make is never in your control. Only how much you can lose. That is the only thing that you can control. Okay? So there are 4 potential outcomes in any trade. You see it? Big win, small loss, big loss. At any point in time, there are only 4. So what do we want to do by allowing ourselves to have a specific VAR? Kung alam mo kung magkano itatalo mo, will the big loss ever happen? Of course it will. It's inevitable that you guys will do something that is not part of your plan. Tama? So it's so difficult for us as individuals, as people, to control our emotions. It makes sense? The best traders in the world have to disconnect their emotions from their trading. Okay? So what does this mean? It means that you want to do your best to be able to eliminate the big loss. Okay? By allowing yourself to have a fixed number of how much you're going to lose, you will always, not always, but as much as you can, mitigate that big loss. Got it? Next. The small wins will offset the small losses. This is how you want to be able to make a profitable trader. You want the small wins offsetting the small losses, and you want to be able to keep the big wins. That's the goal here. If you want to be able to make the big wins, that's how you make it, is a completely different thing altogether. But in order for you to be able to grow your portfolios as a trader and do this as a profession, it's got to be in this format. Okay? Next. Be aware of your portfolio situation. Don't allow yourself to get in a hole. Okay? What does this mean? If you allow yourself to get into a hole, so example, in this situation, you have percent loss in portfolio of 1%, 2%, 5%, and 10%. In order to break even, inisip mo kasi pag down 1%, dapat 1% din aakitin eh. Tama? It's actually not. How come? Because instead of working at 1 million, you're now working at 990,000 pesos instead. Yan yung starting capital mo eh. So it's actually smaller. So these are the numbers that you need in order to make back. So if you're down 10% in your portfolio, you actually need to make 11% in order to break even. But what happens when you're down by 25%, 50%, or 80%? Some people here have all in on CHP. You're down 80%. Tama? How much do you need in order to break even? This is the sad reality. Wow. Totoo ba yan? If you're down 50% in your portfolio, you need to return 100% to break even. Because your starting capital is now kalahati. If you're down by 80%, you need to return 400% to break even. Nagtitrade pa tayo. Ang hirap, no? It's very difficult. So that's why at the very top of this, it says, don't allow yourself to get in a hole. Our risk managers at the office, do you know what the freeze point of my traders are? Freeze point means that if you are what we call VAR, how many percent of your portfolio before we knock you out and tell you you got to go and review your trades? Take a guess how big that number is. You know how big that number is on a monthly basis? Okay, how many think it's less than 10%? How many think it's less than 5%? It's actually 3%. If a trader is down 3% in a month, we knock him out na. 3% lang. That's how small our margin of error is. The traders have to be good enough that they don't lose more than 3% in a month. Can you imagine that? Paano pa kaya tayong mga casual retail traders, di ba? Right? We have to be very careful kasi kailangan mo pa bawiin yung 3% na yun. Remember, if you have 3% every single month gain, times 12, that is 36% return in a year. Are you guys happy with 36% return in a year? Yeah. If my trader is down 3% every single month for 12 months, I have 36% down na ako. That's why we have to be careful with my traders. Make sense? Okay, so number 2, don't allow yourself to get into a hole. Okay? Number 3, understand sunk cost and opportunity cost. It's all about asset allocation. All right? So I'm gonna tell a story here. This is PXP in 2017. This stock went up 200% in 2 months. How many people participated in this? Wala? Nobody? Si Chad lang ata eh. Okay. One of my friends called me during this time. Sabi niya, grabe, sobrang lakas ng PXP. Sabi ko, oh, hawak mo? Oo, hawak ko pa. Sabi ko, congrats. Oo nga eh, tabla na ako. Sandali. Ano sabi mo? Oo, tabla na ako. So the stock went from 3 pesos to 10, tapos sabi niya sa akin, tabla na siya. I just broke even after the stock went up by 200%. So I backtracked. How many years ago, since PXP was at 10 pesos? He held the stock for at least 4 years. And he was down as much as 90%. What's the story I'm trying to tell you guys? The CHP will eventually break even, no? One day, no? Right? Okay, wait, no. That's not the story. I'd like it to happen, right? Okay. But the story I'm trying to tell you guys is that there are 2 things that we have to learn here. One is sunk cost. The other one is opportunity cost. The first one, sunk cost. Not cutting your loss doesn't change the fact that your loss is still there. A lot of people rationalize like this. I heard this so many times. Pag hindi ko pa kinakatyos yan, paper loss lang yan. How many of you guys use that excuse? Everyone uses that excuse. Guys, if the loss is there, no matter how much praying you do, that's not going to disappear tomorrow. It's still going to be just as big. What does that mean? It means that if you don't cut it now, you're holding on to something that has a problem. If you should have cut it already, you probably should be cutting it. Make sense? The other side of the coin. Opportunity cost. If you follow your cut loss now, you can use the funds to purchase a stronger stock that can make back your losses. What does that mean? It means that if a lot of people think na, hahawakan ko na lang to, long term na ako. But in reality, if you sold it at the point where you have to cut it, you take that money and you buy the stronger stock, pareho lang. It's the same. If the other stock goes up, binabawi din niya yung talo mo. Guys got it? Everything is about asset allocation. It doesn't matter what stock you put it in. It's just key that you're putting it in a vehicle that grows. Don't put it in a vehicle that has a problem. Okay? And my last one. Gumana ba yun? Sandali. Never average down unless it's part of your initial plan. Okay? This is a trader summit, so I'm gonna stick to never average down. At pag trader summit, eto. Pag investor summit, kasama yun sa ilalim. Okay? Because EIP, the purpose of EIP is to average over time. Tama? So that is your plan, okay lang. But if you're going to be short-term trading, I don't think you guys are doing EIP. Right? So the key thing here is that you guys don't want to amplify your problem. Okay? You're just going to give yourself a bigger problem. That's number 4. Okay? Guys, keep these things in mind. Never average down. That means that if you just took the money you were going to use to average down on a stock, you can take that money and buy a different stock and it's stronger. Yun na lang gawin ninyo kaysa bilhin niyo yung kulelat na hawak ninyo. Okay? Make sense? All right, so I'm going to wrap this up. The pre-trade. Okay, when we talk about the pre-trade has everything that you need to do before you click the submit button, the confirm the password and then enter order. Before you place that enter order button, all of these things need to be in place. You need to have your fundamentals. You need to know the company that you're buying. You need to know what you are buying at any given point in time. Right? You need to know market sentiment, which on this Trader Summit, we haven't even touched on yet, right? And the last one is risk management at the very bottom, okay? Guys, why is risk management at the very bottom of this framework? Why isn't it the same as everybody else? Why is it at the very bottom? You have to remember this is a scale, tama? If you take away risk management, which is the base of the scale, what happens? It collapses. At the end of the day, this is still a probabilities game. That means that if you're wrong, you have to know how much you're wrong and you have to get out. If you don't know how much you're going to be losing, paglingon mo sa portfolio, X na agad, ayoko na tingnan yan, hindi na nangyari to, para sa apo ko na. Right? Understand that. Everything that we've been teaching here at Trader Summit for the past 2 years, everything that we plan on teaching, moving forward, will be part of this entire process. What happens in the pre-trade? What happens in the execution portion? Pre-trade is everything that you're planning for the trade. Execution is actually trading your plan. What does that mean? It means that do you average down pag natatalo kayo? It means that dagdag ba kayo ng posisyon na hindi ka planado? Right? You guys probably understand how difficult it is to continue to stay focused in that manner. Lalo na pag medyo matagal na yung plano mo, nakalimutan mo na kung ba't mo binili tong stock na to. May problema talaga tayo. You guys have to keep those things in mind. We'll discuss that later on in future trader summits. This afternoon, we will be talking about the post-trade. The post-trade, or what we call review, we'll be talking about how we look at what we did. How do we learn from what we've done? How do we improve upon what we did? Natalo kami. Nagbayad na kayo ng tuition. Matuto naman kayo. A lot of us, we lose money in a stock. Do we even learn about why we lost money on that stock? We don't. We just forget about it because it's so painful. Right? What you don't realize is that since you paid for it already, might as well get something back for it. Might as well learn from it. Might as well understand why we don't ever want it to happen again. Okay? So this afternoon, I'm going to give away one more. So I gave away the trading calculator. Tama? I'm giving away this afternoon. I actually want you guys to, I'm not sure if it's here. Is it here? We'll be giving away what we call the COL Trading Performance Analyzer. Okay? This is basically us at City Securities how we review our trades. We're giving that to you guys. It's a spreadsheet. I want you guys to get the QR code. It'll probably be distributed over lunch. The reason why I want you guys to get it early is because mamaya pagdating sa hapon, during data analytics, hinahanap ninyo, traffic, bagal ng internet dito. Right? So I want you guys to get it ahead of time. The QR codes will be distributed outside. Hopefully, they'll have banners. I want you guys to take a look at it and play with it. So when we talk about it this afternoon in the data analytics portion, you guys will have a general idea of what we're looking at. Okay? All right. There you go. Okay, so or you can get it here at on this link. Okay, so just write it down, jot it down quickly so we can finish up because I have 22 seconds. All right. All right. So, just to close, this August 24 to 25, we're going to be in Singapore. So for those of you who have friends that are interested in joining us and learning from these three individuals here, I hope you guys know who they are. We're going to have a good time. We'll have the executive course brought over to Singapore. So if you guys have OFWs, or if you guys individually want to fly over to Singapore and hang out with us, you're more than welcome to be invited. Check us out at caluminstitute.com. So thank you guys. I hope you guys had a good time this morning. And then we'll see you guys after lunch.